Hello and welcome to our first class. This is Shockwaves Education. Um, Welcome to the first course on the beginners class, right? So in our first class or in the first course, we'll be talking about Introduction to Candlesticks Chart or Candlestick Chart, right? Um, for me, this is the first place for a beginner to start. Understanding candlestick charts, and there are several types of charts, but the most commonly or the most commonly used chart is the candlestick chart, right? And it's something that can be easily understood the moment you put your mind to this. And yeah, so just let's jump into the class, okay? So candlestick charts. Now, I would like you to understand that I'm not a financial advisor, right? Whatever I say here or whatever I present in the channel or in any place or wherever medium I express my view about trading or the financial market, it's just for entertainment and educational purpose only and not for financial advice, right? So let's jump into it. So introduction to um, candlestick chart. Introduction to candlestick chart, right? So number one, we need to understand what technical analysis is and what it's not. If you in my channel, I already shared materials to read about all of that, what technical analysis is and what it's not, right? And just for the purpose of this class, I just want to define for us or read for us what technical analysis one could say is, right? So technical analysis is a study of price and volume changes over time. Technical analysis is the study of price and volume changes over time, right? And technical analysis usually involves the use of financial charts to help study these changes. Technical analysis usually involves the use of um, financial charts to help study these changes. Any person who analyzes financial charts can be called a technical analyst. Anyone who um, analyzes financial charts can be called technical analyst, right? In my previous class, much more of the live class, someone asked me whether a chartist or a technical analyst are they same? Yes, they are same. So whether you call the person a chartist or a technical analyst, right? As long as it involves the financial market and then the person is using financial charts to do that, right? So, and then just want you to understand the difference between fundamental analysis, right? So, fundamental analysis is based on traditional study of supply and demand factors that cause market prices to rise or fall. Fundamental analysis is based on traditional study of supply and demand factors that cause the market price to rise or fall. Now, these supply and demand factors could vary from market to market. Okay, in the crypto market, it could be about the project, the team behind the project, and all of that. There are several factors to check when it comes to fundamental analysis, right? In financial market, the fundamentalist would look at such things as corporate earnings. Now, this has to do with what's it called? I've got these from Chatting Made Easy. So, talking about this has to do with either stock market and the like. So, it has to do with it says in the financial market, the fundamentalist would look at such things as corporate earnings, trade deficiencies, and changes in the money supply. The intention of this approach is to arrive at an estimate of the intrinsic value. Now, if you with me, you just have to mark that word intrinsic value of a market, in order to determine if the market is over or undervalued. Okay, if the market is over or undervalued, you check some factors, right? All this checking is to arrive at the intrinsic value, right? To know whether an asset is overvalued or undervalued. Okay, while technical or chart analysis, by contrast, is based on the study of market action itself. Now, technical analysis or chart analysis, by contrast to fundamental analysis, technical analysis is based on the study of the market action itself, right? So while the fundamentalist is running to know about um, factors, right, that surround the whole market, not factors that could possibly move price in terms of corporate earning, all of that, um, other factors, the value of the company, the team behind it, this or that, right? The chartist or the technical analyst, what he does is to study the market action itself, how price is moving, right? So technical or chart analysis, by contrast, is based on the study of market action, while fundamental analysis studies the reason of the reasons or causes for price going up or down. Technical analysis studies the effect, the price movement itself. That's where the study of price chart comes in. Okay, study of price chart or chart analysis. Okay, so one thing you also need to understand is that chart analysis is not um, like you knowing that this must happen, right? It's not a definite thing, right? Where because you had done your technical analysis, it's now approved to this must happen this way, certain time like this, and must follow that principle, right? It's not that way, right? If you check the materials I sent in the group, or right, you get to realize that a technical analysis is just like doing weather forecast or weather forecasting, right? Where you are giving probabilistic um, um, occurrence or probabilistic predictions of events, or normal like predictions or things that could happen based on these days, right? So it's also so with technical analysis. Okay, so it says make probabilistic forecasts of future price behavior based on price history. Okay, as a technical analyst, what you are doing is probabilistic forecast, which means it's not a definite um, study, not rather study, not a definite um, no, not a definite push to say that this is where price will go, this is how price must behave, right? It's a probabilistic thing, which means you don't know all, you know in part, right? So why if you go through the materials, you get to know the reasons or why technical analysis is very important, right, to in the financial market. So for now, just a few points to take, right? It's to find risk, defined entries and exits, right, on instruments that a speculator wants to be long or short. Okay, that's one of the help of technical analysis, right? You could go back and read those materials, right? So, and then it's not a way to know the future price behavior of an instrument based on price history, right? I've met people whom I, you know, say things like this, that based on this price must do this, price must do that, price must follow this, follow that, and if it doesn't do this, right, they would be out of especially what's it called, the social part, I think Twitter, right? That they'll be out of Twitter if it price does not do this, do that. They'll be out for a while. They'll be do all of that. Now the truth is that in as much as you have hindsight or whatever you're good at, um, doing good technical analysis does not mean the price will follow your predictions as it were, right? Okay, so for me, the way I define technical analysis is understanding human psychology on charts, right? The charts helps you to understand human psychology and how price moves based on human psychology, based on people, based on how people react to things. Okay, so in other words, technical analysis is best thought of as a risk management tool. Okay, that is what it is for me, right? It's best for me. It's understanding risk management to how best to avoid some risk, how best to not really avoid but manage risk, right? Where to enter the trade, where to exit the trade based on technical factors, right? So that's that. So in understanding that, the first part of what we need to understand is candlesticks. Okay, candlestick. So we need to understand the candlestick anatomy. Okay, and in doing that, we just need to look at the candles, and the most popular one is the this is the Japanese chart, right? Japanese candlesticks, right? So that's by the way the name, whatever the name is, right? So okay, candlestick anatomy, candlestick charts are the version of price charts. Okay, candlestick charts are one version of price charts, right? And then for in the anatomy, we have the color, we have the body, we have the wick. Okay, we have the what's it called? The color, the body, and the wick. Now you call it either shadow or we call it wick, or whether the upper wick or the lower wick. Okay, or you call it a shadow, whichever. Right. So body, what's it called? The anatomy of candlesticks. We have the anatomy, right? We have it, the color, the body, and the wick, right? Now, irrespective of what color you're using, right? Irrespective of what color you're using, one thing I like telling my students is the fact that the principle remains the same. Okay, a bullish candle is a candle that moves up, right? That tends to move up or pushes upwards, right? Vertically upwards. That's what a bullish candle is, and then a bearish candle is one that goes downwards, right? In the sense, in a better um, use of word would be a bullish candle is that candle that opens from below and closes above. Okay, that closes from the lows, and rather that opens from the lows and closes at the top. Okay, that's a bullish candle, while a bearish candle is that which opens from the top and closes below. Okay, it opens from up here and closes under. Okay, which means if it starts over here, let's use this tool. It means that if it opens from here, definitely it will close below. Okay, it will close below the price where it opens. Okay, that's the bullish, rather the bearish candle. It will always open from below and close, right? It will always open from top and close below. Okay, so irrespective of the color you're using, whether you're using green, whether you're using what to call it, a candle without any color at all, the principle still remains the same. Okay, so that's that. Whether using like I just had to change this to the traditional colors, where you have as it were the green to be indication of a bullish candle or a candle that moves upwards, and then the bearish candle, which traditionally represent, I mean, it's the red color, right? Meaning that it's a bearish candle, which means it opens from top and closes below. Okay, and then we have the wicks, right? The wicks, which is the highs and the lows. We have the wicks, right? It tells you this was the highest point at which price got to, and this is the lowest point which price got to. Okay, same thing here, the highest price at where price was called it got to, and then the lower part of it. Okay, so it's based on the time frame also. So so that's that. Let me just show you on the chart here. So when we talk about a bullish candle, if you observe here, you observe that the green candles tend to go up. The green candles tend to move up. The red candle, okay, let's just focus on the green here. If you observe here, this green moved up this way, right? The green candle moved up this way, and then what's it called, the red candle, which are the bearish candles. If you observe, they are moving downwards. They tend to move downwards. The green candles are the candles that move upwards and up only. Okay, now, and the fact that I say the green candles are candles that move up only, you can observe that this particular candle got to this point and came down this way, right? It's a okay. Let me expand this very well so that the visuals will be good. Okay, now if you can see this, if you observe this green candle, it has a very long wick, right, or upper shadow or upper wick. If you observe here, it means that price previously got to this top and then came down this way. Okay, it means price actually got to this top and came down this way. And same thing this way, it means the price got to this point and came up this way. Okay, so in to illustrate this, let's do this. Let's say we have this as our candle. Okay, let's say we have this as our candle, and then we have this here. Okay, so let's say we have this as our candle, and as it were, um, this is a green candle, which means it's a bullish candle. Okay, now let's say in the course of events, as price tends to move, right, one thing you need to understand is that price is not a constant thing or a fixed factor, right? The fact what I mean by that is that the fact that this candle is like this doesn't mean it will remain this way. Okay, doesn't mean it will remain this way. So price is always moving, it's always changing. That's the best word to use. Price is always changing, which means this candle will always change. Okay, this candle will always change. In my previous in one of my class, a student asked a question about okay, I made mention about one, that a bullish candle can turn bearish and a bearish candle can turn bullish. And the student will ask, what does that mean? I say it means that a green candle, if we're to use colors now representing it in this format, a green candle can turn red candle and a red candle can turn green candle. Okay, now it means that based on price movement. Now the principle remains the same. And what's the principle? The principle is this: that number one, that it opens from here. That's the number one principle of a bullish candle. Okay, the number one principle of a bullish candle is knowing where it opens. Okay, knowing where it opens, knowing where it opens. Okay, so a bullish candle opens up down here. We have it there in the diagram, right? So it opens here and closes here, up somewhere here. Okay, okay. So a bullish candle will open here and close here. Okay, which means it will open from below and close above. That's what a bullish candle is, irrespective of the color, whether it's in color or no colors at all. Okay, so that's being said, let's hide this, guys. So let's hide this. So now, okay, and also let's remove this. So we know now that the candle opened from this point, okay? Now, this is what happens, right? Um, this candle, this candle can move in different direction. Let's say the candle moves like this, right? It got to this point, which means this was, let's say this was the highest point where it got to. So let's say this was our high, okay? This was our high. Let's say high, okay? And we have it here, pointing this point. This was our high. And then let's say this was our low. Okay, so let's say this point was our low. Okay, and we have this here. Oh, sorry about that. So we have this here as our low. Okay, so one thing you need to observe is that number one, let me make you understand something. Price does not delete itself in a way. The price will always leave a trace. Okay, that's the best word to use. Price will always leave a trace of where it gets to previously. Okay, now what I mean by that, let's say this price, this candle got to this point as the highest point, right, and then did this. Right, did this. Now, what you need to understand is that previously price got up here, okay? Price got here, but as price changed, right? Remember, price is always changing, and then maybe sellers or people who want to buy, as it were, or sellers as in, okay, let's use this for the need that you're new in the space and do not have much understanding about that. Let's say you want to buy this particular market, right? And price is at this point, right? You want to buy this particular market and price is at this point, and you just don't want to buy at this point, right? You don't want to buy at this point. You want to buy at a more discount price, right? Now, what you would do is that you would want to see price come down. Let's say this was, okay, let's put that. Let's say we have here as $100, right? Let's say we have these here. So let's say we have these as $100. The stop. So let's move price back there. Okay. So we have here to be $100, and then let's say, as it were, we have these at 0, no price at all, right? No price at all, which just for study purpose, right? Nothing more. Study reference, more for much more as in for illustration, right? And then we have 50, uh, 50 $50, and we have $25, right? So just for the purpose of this class, okay? So let's say this is half of here, and we have $50. Then we have here as $25, okay? Now, the truth is that should you go to the market and you need to buy something, the first thing you're looking at is how best to buy at a discount, okay? Nobody goes to the market with that buying as in looking at buying at a at premium as it were, right? You always want to look at a discount, right? You always want to look at a discount, whether you're buying full or getting something. I don't know about that, but just let's have that as in a point of reference and illustration, okay? So the highest point price got to was $100, right? And there's this possibility now, a possibility, right, that price could go back to $50. And when you got to the market, and because it's been sold at $100, and then you're looking at how best to get it at $50. Now, whatever factor that happened that brought price down to $50, I can't say. Maybe it could be that supply became much now, right? When people have an excess of supply, price drops or something like that, or whatever it was that happened. But let's say price came down to $50. Now, what you need to observe is that price was at $100 and then price came back to $50. Now, in candlestick charts, what you need to observe is that this is the factor I want that the reason I'm doing this, right, is for you to understand that this was where price previously got to. Okay, price previously got to this point and then came back to this point. Okay, now the candlestick will always leave a trace of where price previously got to, the highest point it got to, or the lowest point it got to. Okay, now the highest point it got to was here, $100. This candlestick, this individual candle, gave us that what's it called map, or a better way to know where price previously got to. So this was the high of the candle, and this is where it got to. Okay, it got to $50. Okay, so now let's say, as it were, we have this chart, and there's no way price would have been at zero, right? There's no way price would have been at zero. So let's say we have another point here, which is let's use um, 30 $30. Sorry about that. $30. Okay, so let's say we have $30 in the picture. We have $25, we have $30. Okay, now just observe this. Now there are several candlesticks in a chart. Okay, several candlesticks. We'll go to time frame for you to understand all of that. But let's say we have different candles here, right? But now we're looking at this individual candle. Okay, now let's say this individual candle, right, as it were, had price okay, struggling between picking these and that. Okay, so let's say this individual candle got to this, let's say it all started somewhere there. Okay, so let's say this individual candle, as it were, um, got to this price. It's just for the purpose of reference and illustration, right? So let's say we have this. Okay, so the list at which price was being sold, okay, so it's $50. Okay, so let's say price opened here at $50. Okay, price opened here at $50 and then got to $100. Okay, and then you're looking at buying at in between what's it called, $100 to $50 where it opened, and you're looking at, okay, I want to buy at $75, I want to buy at that, and then price started doing this, moving down to what's it called, price started doing this from $100 where it was, right? It came to 75, right? It came to, what's it called, 60, 65, 65, 60, and the like. Now, remember something, okay? uh, 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 just trying to make this as easy as possible as it could be. Okay, let's say this is it, and then price actually opened here. So that's the best way to illustrate this. Yeah, so let's say price opened here, right? This was where price opened, and it got here, it got to $100, right? And that was where people, people were looking at, wow, $100, but I don't want to buy it, $100. And then price starts coming down, $75, $65, and then I don't know, you don't know if you get what I'm talking about now, right? So price got to this point, right? Price got to this point, and okay, price got to this point. This is where price opened at $50. Price got to this point. Now, you might now just observe something. The moment price does this, okay, it will no longer be what's it called? It will no longer be a green candle anymore, but a red candle, which means it has flipped being a green candle to a red candle, which means it has flipped being bullish to bearish. Why? Price opened at $50. Okay, price opened at what? $50. That was where price opened at. Price opened at $50 and went up to $100. And when it did that, it was so when price did that, it was all green. Okay, when price flipped from $50 to when price moved from $50 to $100, it was all green, and then it came back to where it opened at. Okay, it came down to where it opened at and came down a little. Now I'm just trying to make you understand how those wicks are formed. Let's say it came down a little to this point, right? And when it did, it now make back this move again backwards. Now what happened is that this was the lowest point where price got to. This was the lowest point price got to. Okay, now this week tells you that price actually opened here at $50, but came lower than $50 to maybe $45, or yeah, maybe $45, right? So it tells you this lowest week was where price, after opening at $50, price came down to what's it called, to $45, right? Now this lower wick here does not mean that this is where price opened at. No, this is not where price opened at. Price opened at $50, but in the course of time, maybe due to weak price movement, price came down to what's it called, $45. Price came to $45 and went back up to where it opened at. Okay, let's say this is it. It came back to where it opened at, which is $50. Okay, now it left that wick there, and maybe price went back again to maybe 75, $85. But now what you need to understand is that price left this wick here. Okay, now this wick means this was the lowest point at which price got to. I know you should have you get it now. Okay, now this is the lowest point where price got to, and that's that. Okay, yeah, this is just a way to illustrate that. And then let's say in the bit of the, in the course of time, this happened. Price got back to $50. Okay, price got back to $50 and then came back to where it got to the lowest point where it got to, was it called, $40 or $45 or whatever, and then came down to $25. Okay, now this is what would happen. This long wick here will turn red. This body of the candle will also turn red. Okay, now that is a flip. Okay, it means it flipped from being bullish to bearish, right? Now vice versa, it means that same thing with the bullish, what's it called, the bearish candle. It can flip to bullish, being bullish, and also it can flip to being bearish. A bullish candle can flip from being bullish to bearish, and also a bearish candle can flip from bullish to bearish, right? So that's that about that, right? Yeah. So I believe you get this. Oh, you got it. So we talked about candlesticks, and then now let's talk about time frame. Okay. Okay, let's talk about time frame. Let's just stay on this chart to talk about time frame. Now, what I want you to understand is that every candle here represents a time frame. Okay, every candle represents a time frame. Time frame, the time frame you choose dictates the time period that one candle represents. Okay, the time frame you choose dictates uh, the time period each candle, one individual candle represents. Now, let's say we have here, this is a 4-hour chart. Okay, this is a 4-hour chart. It means that this one particular candle represents a 4-hour move. Okay, irrespective of the height, irrespective of the length, that's the best word, irrespective of the length, how long it is or how short it is, it's not the factor. The factor is that based on the time frame you chose or based on the time frame you decide to use, right? It means each individual candle represents one, represents the time frame. So if this is a 4-hour chart, look at it over here. This is a 4-hour chart, 4-hour chart here. Okay, so if this is a 4-hour chart, it means that every move of this each candle represents 4 hours. Okay, 4 hour, which means one individual candle represents 4 hours. This particular candle here represents 4 hours. This particular candle here is a 4-hour candle. This particular candle here is a 4-hour candle. If you decide to go to what's it called, a 1 hour chart, the same thing. Okay, a 5 minutes chart, it also means that candle here represents um, each candle here represents 5 minutes. If it is 1 minute, it means each candle represents 1 minute. Okay, now if you are using 15 minutes candle, 15 minutes chart, it means one candle equals 15 minutes. Okay, which means from the start, from the open, okay, let's use this particular candle. Okay, so it means here that from the open of this candle to the close of this candle, okay, the open to the close, it means it's a 4-hour move. Okay, if this is a 4-hour chart, it means from where it opened at, as in the whole session of this candle represents 4 hours. Okay, the whole session of this candle represents 4 hours. The whole move of this candle from start to end before this other candle comes up, it means it's actually a complete circle of what's it called 4 hours, right? So it means it did a full circle, right, of a complete 4-hour move. Okay, there's a complete 4-hour session, a complete 4-hour move, as in this individual candle means complete 4 hours. 4 hour, right? And this other candle 4 hour, this other candle 4 hour, this other candle 4 hour, irrespective of how long or how short it is, it means each of them is a complete 4-hour candle. Each individual candle represents a 4-hour move. Okay, so the higher the time frame, candles are, right? The higher the time frames, right? The higher the time frames, it means also each candle represents that time frame. Okay, each candle, if this is a 24 hours, a 1 day chart, it means each candle here, each individual candle represents 24 hours. Okay, each individual candle represents 24 hours. So, and another thing you need to understand is that higher time frame candles, okay, higher time frame candles um, comprised of lower time frame. Okay, okay, let's do it this way for better illustration. uh, let's say we have this. Let's say we have this, okay, as our candle, and let's say this is a 4-hour chart for rather 4 4-hour candle. So now let's say we have this as our candle. It's a 4-hour chart, okay, a 4-hour candle. Now it's just uh, it's normal as in you can just tell that in this 4-hour candle, right? Let's do this. Okay, let's leave that. Let's say this point to this point represents a 4-hour move. Okay, now it means that it started from zero. It started from zero. If we are to use minutes, okay, started from 0 minutes. Let's make this small. Started from 0 minutes to 2:24 minutes. Okay, so if that is understood, okay, if that is understood, it means that based on this time frame, okay, if what I just said is understood, or this illustration is understood, it means that based on this time frame, okay, you will find a 1-hour candle here, or a 1-hour chart. You can find a 1-hour chart in these 4 hours. You find 3-hour charts in these 4 hours. You also find 5 minutes charts in this same 4 hours. Okay, so what I want you to understand is that based on the higher time frame, you can always find splits of, different other time, lesser time frame in each of them. Now, let's say if this was supposed to be a 24-hour candle, if this was supposed to be a 24-hour candle or a 24-hour time frame, it means in this particular candle, should you go to a lesser time frame, right? This particular candle also you will find what's it called, 8-hour charts, you find 6-hour chart, you find 4-hour chart, and all of that. So I think you should have understood that, right? So time frame analysis, right? It makes you understand that each one candle represents the time frame. Each one candle represents the time frame. Each one candle represents the time frame. Okay, 1-hour time frame equals to 4 times, as in 4 times 15 minutes. Okay, or 2 times 30 minutes. Okay, and so forth. Okay, so it means that in a 4-hour chart, you get well, rather in a, if this was to be a 1-hour chart, okay, it would be, you can get 4 15-minute charts on this. Okay, 4 15-minute movements. Okay, so if this was to be 1 hour, okay, let's say this was to be 1 hour, for example, let's say this was to be 1 hour chart. Okay, let's do this. I'm trying to see how best I can do this for even one that does not have any knowledge about whatever I'm talking about. Okay, um, if a child can't understand it, then it's useless. So let's say this is a 1 hour chart, and then we have here as 15 minutes, 1 5. Okay, so it means that you will get 1 2 3. Okay, 4. So it means you get something like this. Okay, ignore the spacing, right? I may not get the spacing right, but just understand the principle or the what I'm trying to illustrate here. So if this is a 1 hour chart, it means you will get 4 different what's it called, 15-minute candles from this. Okay, so let's do this. Let's say this is a 15-minute candle. Okay, so let's say you get something like this. Oh, sorry about that. You get something like this on the chart. Let's say this was supposed to be a chart. Okay, you get something like this. Yeah, get something like this. Get something like this. Okay, let me just use clone. Right? Clone. This. So now ignore the color, right? Whether it's a falling candle or what's it called, an ascending candle. It means you get 4 of these candles in this movement. Okay. I don't know why it's a bit clumsy, right? So I'm just trying to just see how I can best illustrate this move, right? Just trying to see how best I can illustrate this, so that even my little daughter can get it without any difficulty, right? So we already have 4 there. So what I'm trying to say, or what I was trying to get us to understand here, is that each candle represents a move, okay? Each candle represents a move, and that move is based on, what's it called, um, the time frame, okay? Based on the time frame that you're using. That's what makes you, okay. So that's it here. So each candle represents a time frame, okay? So here we have a 1 hour time, 1 hour chart, or a 1 hour time frame, and each in this 1 hour frame, if you have to use a 15 minutes time frame in a 1 hour chart here like this, now this 1 hour candle, you get different 15 minutes candles for 15 minutes candle, right? 15 15 15 15 30 30 minutes gives you 1 hour, right? So that's that. And it's as in it runs same whether it's a 1 day chart, whether it's a weekly chart, whether it's a monthly chart. Okay, so that's that about this understanding introduction to candlestick chart. Okay, right. So remember the principle, irrespective of the color you're using, irrespective of the color you're using, uh, the chart remains the same. Okay, irrespective of the chart, the what's it called, the time you're using, right? Irrespective of the time you're using, it remains the same. It remains the same, irrespective of what time frame you're using. Irrespective of what time frame you're using. Okay, the principle remains the same. A bullish candle, it's um, it's one that the candle goes up. It starts, it opens from low here, opens from low here and goes up. That's a bullish candle. A bearish candle opens from here, from top here, and closes below. So that's the principle about that. Understanding what's it called, um, candlesticks, and then Also to time frame that I explained here, understanding time frame analysis, right? Understanding time frame analysis would do so much, right? Understanding time frame analysis would do so much. Okay. Okay. Just ignore all of this, right? Just ignore all of this. But just understand the principle of what I just explained. Okay. Just understand the principle. What I just explained remains the same. Okay. Remains the same. So, like I said, in a 1 hour chart, if you do 15 minutes chart, it means 4 candles of your 15 minutes chart will represent that 1 hour chart. Okay, so that's that. And importance of using what's it called, a higher time frame is it helps you to zoom out. Okay, it helps you to zoom out and to see much more data than using what's it called, a lesser time frame or a lower time frame. Let's say, for example, you want to check a monthly chart. Okay, okay. Let's say you want to check a chart, the month of, let's say we're using November, right? So you want to check a chart of November, and then you want to know what happened in the month of November, right? Now, if you're using 15 minutes chart, you would, okay, let's do something. This is a monthly chart. Okay, this is a monthly chart. Now you can see what it looks like. This is a monthly chart of this particular asset. Okay, this is a monthly chart. In this monthly chart, we have just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, I think about 19 candles or thereabout, telling you that about 19 months, right? This was either listed or when it came up, right? And this is all it is, right? Just 19 charts, rather 19 candles, right? On the monthly chart. Now, if you go to the weekly, you'll see it will spread more. You have more candles on the weekly, right? Now, from 19 candles to several candles on the weekly, right? And then if you go from the weekly to a day, you get much more candles, much more data to look and check. But when you do the monthly this thing, it compresses the charts in a better way. You can see if the chart is maybe for several years. You do a monthly chart, it will compress it for you to see details clearly as you should see on a several, I mean, maybe a 1 year chart, a 3 year chart, a 5 year chart, a 10 years chart. You do monthly chart, it helps you see what you should see clearly. But if you do what's it called, 4 hour charts, when you go to check a 2 year distance, you can't really see what you need to see because it will actually, the data will be much. You need to keep moving your chart to go to particular period that you need to check. But using the monthly or the weekly helps you just get the data you want to get easily. Okay, so that's that. In our next class, we'll talk more on these, but just understand, number one, about candlestick, the principle remains the same. Okay, the principles remains the same. A bullish candle is a candle going upward. A bearish candle is a candle going downwards, which means a bullish candle opens from the lows and closes at the high of the candle, while a bearish candle opens at a low or at a point, right? Whatever point it opens, it closes below the point it opens. That's the best way to use it. A bearish candle closes below where it opens. Okay, a bearish candle closes below where it opens. A bullish candle closes above where it opens. And that's the principle. And that's all we have for today about candlestick charts. I mean, introduction to candlestick charts. Okay, yeah. So should you have any question, you can throw your questions or in our free channel. You can ask your questions and all of that. And you can check us on Telegram at Shockwaves Education, or you just put at Shockwaves, right? At Shockwaves, you just search at Shockwaves, and you will find us there, right? And this is our chart, Shockwaves. Ah, yeah, and this is it. You can always find us here. You can always find us here at Shockwaves. Okay, so you just go there and search Shockwaves, and there you go. You'll find us. So it's nice having us having this class. So see you on another class. Thank you.